Welcome back. Sagility India posted its Q4 numbers largely in line with expectations. They have reported about a 5.7% quarter-on-quarter revenue growth, 17.7% on a year-on-year basis. Ramesh Gopalan, MD and Group CEO at Sagility, is now with us on the show. Thank you very much for joining in. I believe this quarter there would have been an impact of the Broadpath acquisition. Is that correct, Mr. Gopalan?
Yes.
And if yes, could you tell us what was the contribution on account of that? What was the organic growth, quarter-on-quarter, year-on-year, and how much did it impact your margins?
Yes, so Broadpath acquisition, like you said, we did that end of January. 2 months of the quarter, Broadpath was included. So if we exclude Broadpath revenue for the quarter, the organic growth for FY25 was 13.3% in USD terms, constant currency terms, and 15.6% in INR terms. And on a Q-on-Q basis, excluding Broadpath, the INR growth was 2.7% and the constant currency was 0.5%.
13.5% was the full year growth number, right? Organic growth?
No, the full year growth, like I said, was 13.3 constant currency and 15.6 in INR terms. And the Q-on-Q growth was 2.7 in INR terms and 0.5 in constant currency without Broadpath.
Okay. And what about the impact of all the acquisition-related expenses on your margins?
Look, the Broadpath in Q4 was the impact on margins was about 110 basis points on the EBITDA margins.
Okay, but even if you strip that out, I think your margins are still down on a quarter-on-quarter basis. So what explains that?
Look, we were following a fiscal calendar, a calendar fiscal, which is Jan through December. So we gave salary increases effective Jan 2025. So there was an impact of roughly about 70-80 basis points because of the salary increases. The other difference is basis the other income, right? So other income in the previous quarter to this quarter, there was a difference of almost 260 basis points because of that. And then the balance is because of the Forex on the balance sheet, which is classified under Forex loss in other expenses, right? So those were the reasons why there is a dip on the EBITDA Q-on-Q. Operationally, we still performed very well.
Mr. Gopalan, good morning. What about FY26 then? What are the targets that you have set in terms of growth in INR terms, and what do you expect to be the growth drivers? Would it be the existing clients, the new clients that you onboard, or a mix of both of them?
Both of them, right? So we continue to grow on our existing clients. The relationships are strong. We identify newer opportunities in all of our existing clients, and they still continue to drive our business. And like I mentioned the last time, Broadpath acquisition gave us access to 30+ mid-market clients. And we're trying to cross-sell our services into Broadpath clients. So that's also expected to generate additional revenue. So it's going to be a mix of both existing clients and new revenue. We are guiding the same low to mid-teens growth organically in constant currency for FY26 as well. But given that Broadpath acquisition happened in end of January, that will play out for the full year. So including Broadpath, our top line growth would be in excess of 20% for next year.
So 20% is your top line guidance for FY26, including Broadpath. Stripped of that, would organic growth
organic
be
growth, like I said, it will be low to mid-teens like we did this year.
Okay, so similar. And what about margins? Because analysts feared that Broadpath, given how on-site centric it is, the margins are lower than Sagility's India, and that could drag your margins.
Yes. So yeah, we mentioned that at the time of acquisition, right? So it's going to be dilutive to our EBITDA margins by 120 basis points. But with that, we are still projecting a close to 24% EBITDA margins for 26.
Mr. Gopalan, you've been aware of what has been happening in the US for the last 40-45 days now with all this tariff drama, the back and forth that has happened. Has there been any change in sentiment on ground when it comes to your clients over there? What are you penciling in, or is it too difficult to project a growth outlook for a market like US considering the situation that is there on ground currently?
Look, The specific impact on tariffs, especially on our clients, which is more payer-centric, has been minimal, right? So the tariff in itself isn't having any impact. But our clients have been under profitability pressures last year as well. So that's not specifically with respect to tariff, but because of other factors. But like I've mentioned in the past, what we impact is the operational expenditure of our clients, right? So that doesn't get really impacted in terms of decision making. So we don't see too much of an impact on the decision making cycle or our deal cycles, and that's why we continue to project the same low to mid teens growth like we projected in the past. So technically, we are not expecting any impact to our revenues.
How much is your exposure to the US, Mr. Gopalan, if you could quantify that as a part of your overall top line?
Our exposure is 100%.
So all of it. Oh, okay.
Yeah,
Right. And what about your top 10 clients, Mr. Gopalan? Currently, it stands at still at around 90% in FY25, and that number has remained constant across the last 3 years. Is there a plan to bring that down and focus on expanding the client base, or does this remain the same even this year?
No, it will come down this year. Again, thanks to Broadpath acquisition, we've gotten a lot of logos outside of our top 10. So that in itself will bring the concentration down across all the numbers, right? Top 3, top 5, and top 10. So you would see changes in all of those numbers in FY26.
So it comes down to 80%?
Maybe not 80%, but definitely around the mid 80s.
And final question, sir, your debt reduction as well. You've brought your debt down from 2,200 in FY23 to almost 1,000 crores now in FY25. What do you expect to bring it down by the end of this year?
See, the whole debt is the promoter debt, right? So there is a pay down schedule that we've given as part of our earnings release. So the full debt would be paid down by FY27.
All right, Mr. Gopalan, thank you so much for sparing time and joining us today. Wish you good luck for the rest of the year as well. The management there of Sagility saying that low to mid-teens organic growth in FY26 and hope to pay down the entire promoter debt by FY27. Take a short break. On the other side, more market conversations with George Thomas from Quantum AMC. Stay tuned.